things became much easier once I started to build a real business around like, okay, this is really tangibly now my niche and my business model. And I just became completely and thoroughly obsessed with that.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik. With me, as always, is John Cohen. How you doing?
We're good. We got equity partners changing splits and hurdles on deals and post closing, trying to amend shit. So another day in paradise, right?
I hear you. Yeah, it's always fun. But whatever, we'll make it work. We'll get it done. So we'll see what happens with that. I got
a call after this with who to say, hey, guy's making a major change. You want to step into his shoes? So we'll see how that goes. But yes. We always figure it out.
Yeah, absolutely. So if everybody thinks it's smooth sailing just because you have someone agree, don't think that. Nope. We got a really great guest on today. We're going to dive right in. Bring him in, let him introduce himself. Super excited to hear his story, his journey, and everything he's got to tell us. So that being said, Bryce, thanks for joining us, bud.
Yeah, g'day, Chris and John. Thanks for having me here today, fellas. The super quick background on me is born and bred in Australia, and I left school. Actually, I didn't even graduate school. I left school and went straight into the blue-collared workforce and ended up working as a welder. I worked in the underground gold mines and the gold mines in Western Australia and Northern Territory. And then in my early 20s, I decided I want to go travel the world. So I basically saved up a little bit of cash from working in the mines, and then I jetted off. And I went over and I started off with the first base camp in London. And I based myself in London, and I worked my butt off there for sometimes 10 hours a day, 12 hours a day, even 7 days a week. And I would work for a chunk, like maybe 3 months at a time. And then I'd take off to Europe, and I'd travel around Europe until my money ran out. And then I'd come back and I'd do it again. And then I'd go to Africa, and then I'd come back, and then I'd go to Europe. And I did that cycle for about 3 years. And then I wanted to change the scenery. So I went over to Canada, lived in the mountains there, did a whole bunch of snowboarding and downhill mountain biking, and had my own little business in the mines there. And I ended up staying there for about 18 months and saving up a whole bunch of cash this time. And then I went down to Central and South America on a surfing and scuba diving trip for about 18 months. And then in the last 6 months of that trip, I ended up meeting my wife, who's a native from California. So naturally, I ended over here in the States. And, when I got to the States, my wife and I were like, how about we recreate this life that you've been living, but this time let's do it without money running out. So we explored all the different possibilities of making money. We looked at stock markets, owning a business, and real estate. And in the beginning, I was doing a little bit of everything. And then I ended up spinning plates because I was trying so many things. We were doing we had a small construction business. We were getting in stock market, real estate, even multi-level marketing, and I was doing too many things at once and spreading myself thin. So I'm like, all right, I have to laser focus on one thing. And I knew it was real estate with my 17-year construction background. And real estate was a clear choice for me. But what am I going to do in real estate? So I looked at all the different P&Ls, all of the different ways to make money, and mobile home parks was clearly the choice for me. So I went out there, got educated, and then got my first park. Actually, my circumstances when I got my first park was I had a negative net worth. I had $2,000 in the bank. And I had unseasoned credit because I hadn't been in the States for very long. And I really didn't know what I was doing. But I ended up putting a deal together. I syndicated the deal and then got that one across the finish line. And then 2.5 years later of repeat massive action, ended up becoming financially free. And my wife and I retired ourselves from our day jobs. And since then, we've just exponentially grown. So that's pretty much it.
I love that. That's
phenomenal.
So I do want to back up because I think getting into that first deal is really interesting because so many people come from a place of the exact desire that you and your wife had and looking to achieve the same thing and feel like I don't have the resources, I don't have the capability. There's so many people with more money and they can do it and I can't. So what was that like for you when you went to go do it and you realized, maybe not a whole ton of cash, credit wasn't where it needed to be, resources probably weren't where they needed to be, education wasn't where it needed to be. How did you look at this hurdle, massive or small, and what were the steps you took to overcome it?
Yeah, so my eyes were first open to the concept that you could get into a deal without experience, without money, and without all of the resources. When I went to my first real estate investor meeting, I went to a meetup in Southern California. I sat there. The guy at the front of the room was saying, "Hey, you can get involved in deals. You don't have to have any money or experience. All you have to do is team up with somebody who has the money. You can go out there, do the hard work, and get it done." And then I kind of sat there after the meeting and I thought, well, that sounds really cool, but I think the guy's just trying to sell us something. And then I started talking to the people that were in front of us, and they were this older couple, like probably mid to late 50s, Tommy Bahama shirt on, looked like they just jumped off a cruise ship. And they're like, yeah, we've done 3 of these deals. I'm like, you guys kidding me? And then I ended up speaking to some other people in the room, and they're like, yeah, we've done these deals. We've done it. And I'm like, people are doing deals and they don't have any money in it. So that opened up my mind to the possibility. Then when I got the park under contract and it came time to put the deal together, cold hard reality hit, because I just thought, oh, it's going to be like a piece of cake, or I've got a really awesome deal. Everyone's going to be jumping with their hand up to give me money. And so that was my first basically cold shower of what it's like to bring money into a deal. I hadn't really done much preparation. I hadn't really put my feelers out there and already built a network of people who were looking to invest. And so I ended up doing that deal with friends there, and they ended up becoming essentially JV partners on that one. But then moving forward from that, I learned how to actually syndicate a deal, and I learned how to establish credibility and go out there and actually build a group of investors. So then from then onwards, I actually had the right path to properly syndicate a deal and bring in passive investors. But yeah, it was just like, at the time, actually, when I got the deal under contract, I had a mentor, and it embarrasses me to say this, but I had paid about $30,000 for like mentoring and coaching. And I called this guy up and because I needed to get this mobile home park deal across the finish line, and he didn't answer. And I finally got through to him, and then I told him my circumstances, and he said, "Oh, you're dreaming, kiddo. It's never going to happen. You're never going to get that deal done." And I was like, you kidding me? I just freaking paid $30,000 for that advice. So I hung up on him and never did it again. And that actually really, really motivated me to go out there and prove him wrong that, oh yeah, I can actually go out and get this deal done. Watch me. And so that really gave me a lot of motivation.
So that's interesting, because people ask me all the time, I got this offer from a mentor, and I say, mentor's only as good as what you make of it. And this story is the example I give people all the time. Sometimes writing a 30, 40, 50, 20, $5,000 check is the kick in the ass you need. Whether they give you the information or not, it could be the motivating factor that says, I just spent 30 grand. I got to prove this guy wrong. Or, that's my level of accountability. I just spent money. Now I'm going to make 10 calls to brokers. Now I'm going to make 10 calls to investors, or whatever it is. So sometimes people think that, the easy way out is a mentor because they're just going to give you everything you need. But I argue and say, guys, the mentor for me, and the way I look at it and the way I advise people, is it might be the worst experience of your life. But if you buy a park or an apartment building or a single family flip because of it, did it work or didn't it work? That's a question you have to ask yourself. So I'm not, I'm similar in the regards of, I like to prove people wrong. So when someone says you can't do something, I take that as a challenge. But I'm glad you said it, because most people don't talk about that side of the mentorship, right? They always talk about, oh, it was good, it was this, it was that. But, sometimes that's what's important. So it's embarrassment or not, it's probably what's fueled a lot of the desire to go forward and push through and be, and do what you've been able to do in 2.5 years.
Absolutely. And would I go back and spend another $30,000 with that mentor again? Not a chance. But I certainly got a lot out of it, and I don't regret it. And, look where I am today. So
fantastic.
Yeah. So when you started running into those hurdles, because when, you start getting involved, you're going to run into problems. Everybody has it unless you have some sort of background. Where did you turn then? So the mentor you paid for, which you thought was going to be the place you could turn to, how did you pivot? How did you overcome it? Where did you go?
Yeah, so I'd already been in the sphere of other mobile home park investors because that was a niche that I'd chosen, and I'd been looking for mobile home parks for probably about 3 to 6 months at that point. By the time that I got my first one under contract, actually, I just reached out to other investors, and I'm like, hey, I got this deal. I told them the stats. They're like, that's amazing. You got to get it under contract. One of my investor friends just said, here's a contract. Get your attorney to bless it and use this one. So I used that, and it was literally just like a step by step. It was like, all right, here's a park. I've got to get it under contract. So I got the contract, got it blessed, got it under contract. All right, what's the next step? I've got to do due diligence, and then I've got to start, raising some capital as well and bringing people in on the deal. And so it was literally just like, I knew the overall goal was to get this park, and I knew I was going to do it, and I'll do whatever it takes to get it within my values and morals, of course. And it was just literally like, all right, what's the next step? Like, what's the next step? What's the next step? And I pretty much just did that all the way through the deal until it was done.
Yeah, I think that's so important. Too often people, not everyone, but a lot of people that are in this industry don't make as many connections with people doing the same thing as them. Oftentimes, like, why would you talk to them? They're your competition, especially if it's in the same area doing the same thing. But having those resources, it's not that big of a community. I had a conversation today with somebody who's an operator who literally owns properties around the corner, and we were just talking, and I was using him as a resource to get some extra information, and he was happy to share, because oftentimes there's so many people that aren't BlackRock. There's so many people that are only doing a couple deals or doing decently well, enough to be financially free. And this world is abundant. There's so much for so many people. You don't have to compete. You can be resources for each other to help lift each other up. And especially as you're getting into this and getting your feet wet and trying to break into a certain asset class, area, niche, whatever you want to call it, it's so important to have those people that are trying to do the same thing or have already done it, because there's so many people that will help you out along your journey because they had people do it for them. And it's a way to kind of reciprocate what they've been given. So I'm sure having those people in your corner that were going through it or had already done it was tremendous in your ability to go through the first deal and then even scale up to, however many deals you've done today.
Yeah, absolutely. And, when you said that some people then get the desire to want to give back, that's exactly me. Like, I didn't have that many people that reached out to help me, or that when I reached out looking for help, that actually stood up to the table. And so I really, really appreciated that. So that once I became financially free, one of the things that I did to shift was I became an educator myself, so that I can help people become financially free. And so I can help people learn these skills in mobile home park investing and raising capital and things like this, because I truly believe that we live in a world of abundance. And there's plenty of mobile home park deals to go around for everybody. I don't believe in like limitation and scarcity and like, we're going to compete with these guys. Like, I don't really compete for deals. There's tons of deals everywhere. And, I don't need all of them. I just need a handful. So, and the mobile home park space, I will admit, is a pretty cool space of the other operators. They're pretty friendly. People are willing to share different contracts and different documents and different tactics. Because, I've got parks sort of nationwide, and each state has different rules and each state has different laws. And so we like share information, and it helps us. And it's it's a good little community. So I totally believe in connecting with people in your own niche for sure.
Yeah, I think it's hugely important, especially as you go into other areas. Because like you said, state to state, county to county, city to city, things change minutely and things change vastly. So having somebody in that area telling you, oh, you got to watch out for this on taxes, or you got to watch out for this on zoning, it's hugely valuable, because you don't have to figure it out yourself. And a lot of the ways we figure stuff out is through trial and error. So if you can remove that error piece and just know how it works, that's only just going to save you money, hit you bigger returns, move you forward along your journey. and just kind of do all that stuff for you. So I think that's really interesting. I do want to take a step back though, because you started talking about you had the deal and you thought money would come very easily. And you started having those conversations with people you knew who may or may not have known you were getting into real estate. And if they did, it was probably just a passing comment, wasn't anything serious. I was talking to someone about this, of how do you have that conversation with people you know to start either investing passively or doing a joint venture with you or getting involved in real estate in one way or another. What was that process like for you? What were some of the things you tried and failed at, some of the things you tried and succeeded at? How was that?
I pretty much just hit everybody with my new reality. And it was probably like a slap in the face with a cold fish, because I was just like a dude who was traveling and surfing, and I was doing all of my construction stuff. And then all of a sudden, like, I'm into real estate investing. So yeah, like you said, people in the beginning probably just thought that was, oh, that sounds cool. Oh, that's great. You know, little pat on the back. They probably didn't take me seriously. So I sort of just made a shift. I suppose I started to put a few posts out on Facebook, letting people know what I was doing. And I was just telling people. And I think after a little while, people really would have got enrolled in my enthusiasm, because I was really freaking excited about it in the beginning. I'm like, oh, I'm going to become financially free. It's going to be amazing. I'm going to be a millionaire. And then people probably didn't believe me in the beginning. Mm-hmm. But then as that progressed and as I started to do things, and people were like, wow, he's actually putting this thing together. So it was really just like, I know what I'm doing. I know where I'm going. And then hopefully you can see that in me. But it is a bit of a challenge, because it's like, all right, you are not a real estate guy. And then all of a sudden you are. And like, how am I going to invest a couple of $100,000 with you? Because like, how are you going to prove to me that you can do what you need to do? And that's where I actually could fall on the tailcoats of some people who actually had been successful in the mobile home park space, that looked over my shoulder, that were looking at my deals and just like blessing them. And I was going there for a bit of support and advice. So it wasn't necessarily me that I had everything that I needed, but I surrounded myself with a support team, so that I did have everything, so that people could get involved in the deal and feel comfortable.
I tell people all the time, you know, when you start that process, you really start that process today for 12 months from now, or 6 months from now, or 18 months from now. Because when you start, if you find a deal tomorrow and nobody knows who you are, like you said, they looked at you as a construction guy. You know, anytime I give advice, I say, you know, start today for the deal you may come across. Educate your database, whether it's investors or brokers or whoever it is. Educate them on why you're the guy for real estate, or you're the girl for real estate, or you're the person in their network for real estate. Because once they looked at you as the real estate person and not the construction person, I'm sure it became a little bit easier, if not a lot easier, for them to feel that commitment. Oh, here's a couple $100,000, or here's $50,000, whatever it is, because now they saw, well, you know, he's got this guy in his corner, you know, there's a backstop if something goes wrong. But when people always want to find the deal quickly first, and, oh, now I'm going to figure it out. There's nothing wrong with that. It just sometimes a little bit harder. Do you think, and I think this is a question I like to ask a lot of people, you know, do you think if you would have heard that or knew that or tried that first, it would have been easier to raise money?
Oh, heck yeah. It would have been way easier. I mean, just fast forward to the next deal. I mean, we raised a couple of $1 million. So it was significantly easier. And yeah, so I was just scrambling at the last minute to try and put the deal together. And to comment on the note you made, I did exactly that. I stood up in front of real estate investment meetings and gave little presentations on the deal. Just, you know, I tried to pose myself as an educator, even though I was still getting educated myself, because I just had to get myself out there and build as credibility as quick as I can, which was harder with my family and friends because they knew me to be somebody else. But when I meet new people, it's their first time of meeting me. Oh, he's a mobile home park guy. So that was a little bit easier. But yeah, I ended up doing that deal with friends and family anyway. So
that's awesome.
Yeah, I think when getting started, one of the biggest things that helps is talking early on in the process about what you're going to do. And as people see you actually taking steps to do that, they feel way more confident, because there's so many people you talk to and they're like, oh, I'm going to lose weight, and then they don't do it. Or I'm going to go out and I'm going to travel the world, and they don't do it. But when you say you're going to do something and then go do it, right? If you heard about somebody that, traveled the world for a year on $10,000, you'd be like, wow, that's pretty interesting. And you might hit them up and just be like, hey, I'd love to do that. How are you doing it? And whether you pay them or not, but that's hugely valuable. It's proof of concept. So when you can go out there and show somebody, hey, I've got X, Y, and Z, and I'm looking to do this, and here's my resources. As you continue to do it longer and longer and have some success and people hear about it, that's when people really start taking it seriously, taking a long, hard look and saying, okay, this is something I'm actually interested in. This is something he's taking seriously. It's not just some, fad or something he got sold on, because a lot of people do get sold on real estate. They pay X, Y, and Z, and then 6 months later, they're off doing, MLMs or Forex trading or something like that. So there is something to be said for the consistency and sustainability. And I think that's why John's point that he always reiterates is start today for the deal in 12 months. Because if you can show someone consistent, persistent progress over a sustained amount of time, you're going to be able to show someone that you're committed, you're serious, and that you're not just going to flake out, 3 months after they give you money. So I'm sure you've seen it, we've seen it, but as you go through the process longer and longer, that conversation becomes significantly easier.
Yeah, and if you can't commit to 12 months to expand your business, then you're not committed to building a business of any significance.
100%.
Yeah.
Yeah. So bought the first park and then moved on to the next couple ones. When did it shift from, hey, just doing a couple, a joint venture with some friends and family, to, hey, I'm really syndicating this business. I'm building it out. I've got multiple investors who are, they're just contacts as investors. When did that shift start to happen, and how was that like for you?
Yeah, it would have been the second deal. I knew myself right in the beginning, before I got my first park, that I was going into this all in. And so I knew that was my vision. And by the second deal, I'd already had experience on the first one. I'd been managing it for a while. I'd already done a lot of the turnarounds, and we brought homes in and fixed a lot of things up and done work to the infrastructure and increased the NOI. And so I was like deep into it. So things became much easier once I started to build a real business around, like, okay, this is really tangibly now my niche and my business model. And I just became completely and thoroughly obsessed with that. I started educating, speaking at a lot of meetings, hosting my own events and boot camps and bus tours to actual mobile home parks to show people how it works and show how operations work, and just going all out. So yeah, I was blogging, speaking in front of a room, hosting my own events, networking like crazy. So living in Southern California, I was living in Orange County, and I would go to meetings in LA County, Orange County, San Diego County, and Riverside County. So that's like sort of geographically 3-hour sort of loop. And I would go to 1 to 2 meetings a week. And I did that for about 1 to 2 years. And I ended up building an investor list of 500 people within the first 12 months. And it sort of expanded from there. So it was really, I suppose, how it worked for me. It was just, I knew what I wanted, and I just took all out massive action, laser focus. Once I decided I was doing mobile home parks, the universe must have just said, oh, I'll test you. And then it just threw multifamily deals at me. It threw other opportunities at me. And I had to just say no to all of it. And it was a little bit challenging, because I was like, oh, that's so attractive, and that's attractive, and that's attractive. I'm like, nope, not going to do any of that. Just laser focus on mobile home parks.
That's good. So with parks being in multiple areas across the country, I know one of the things that we've talked about, because it's a space we've been trying to get into and got our toes into, basically, how have you guys handled the management side of things? Because oftentimes, there's no real third-party managers, and if we've never met anyone that's good, and oftentimes they don't support full-time staff like multifamily properties do. How have you guys handled the management of these properties?
Yeah, so Inhouse management, affiliate company, our own property management company, essentially. Because in the apartment space, the monthly rent, we're talking like over $1,000 a month, $2,000, whatever. When you have 7% of a 200-unit apartments, there's actually like pretty legitimate money there to be made for a property manager. If you try and do the same thing in a mobile home park space where the lot rents average about $300 a month, you can't get quality third-party property management. So we do in-house property management, and then we've got our off-site team, and then we've got our on-site teams as well. So our on-site teams comprise of on-site manager, on-site maintenance. If it's a small enough park, it will be a combo of both. And then in, larger parks, we might even have like a bit more of a larger team. But really, the biggest thing about managing afar is just the psychological hurdle of knowing that you can't drive 20 minutes down the road and get to your park. I've got parks completely across the other side of the country, and it's never been a problem. I mean, I've had gas leaks. I've had like just about everything that could possibly go wrong. And there's always a way to be able to handle it. So the first thing is having really, really good on-site manager. And the main thing is, are they going to pick up the phone all the time? Are they going to be reliable and give you accurate information? And then like we're in a technology age, so it's pretty freaking easy to grab your phone and to just, go out there and film something, take a quick video. We give our managers a little sort of GoPro. It's a different brand. I think it's a Polaroid Cube we use, but it's like a GoPro, and they stick it on the hood of their car and they cruise around the park and they do a drive-through video. It's basically like me walking through the park and looking at it all. We get before and after videos of everything that we do with construction. And then we get third-party verification. So if something needs to be done, they send photos and videos. They'll do the work, and then we'll get completed photos and videos, and then we'll get a third party to go over and inspect and make sure that the work got done correctly. So there's, and think about it. You've got a mobile home park that's got about 200 spaces in it. There's going to be about like 500, 600 people that live there. We find out everything that happens within that park because there's like so many people there that are going to tell you about it and rat on this person and rat on that person. And we've got all these different contractors going out there, and this contractor will tell you about that contractor. And so you always find out what's going on and you get to it pretty quickly. And there's so many people involved, and inspectors and construction crews and all the tenants that it actually works pretty seamlessly. But the main thing that's really, really important to managing from afar is having good boots on the ground out there, having a good maintenance person, having a good manager that's going to be honest and reliable.
Is there a size park that you just don't see makes sense for you today, or when you started advising someone listen to this more or less, someone's saying, hey, I want to do this, but I only have this much cash and I don't want to syndicate it. Mm-hmm. Is there a size range that says, for me today, it's got to be 200 lots. When I started, I would have bought a 5 lot, right? What does that look like for you guys?
Yeah, my first park was a 40 space park. I've never bought anything smaller than that. I wouldn't, I don't think that I would buy anything ever smaller than 25 spaces, for the reason that if 3 or 4 or 5 tenants don't pay rent 1 month, then you've pretty much lost your cash flow. If not, you're a little bit negative. But if your 40 spaces are above, you've got a lot more wiggle room. 5 people don't pay, it's not going to hurt you. You can still get by. But interestingly, and so I would only buy, me personally, I would only buy a 25 space park if it was close to one of my other parks, so I could piggyback the management of it. Otherwise, it's certainly not worth my time. But I would recommend, if people are out there looking, I would suggest looking for 25 spaces or over, because you have that more wiggle room there on your cash flow. But, to manage a 20 space park, well, let's bring it to real numbers. To manage a 40 space park and a 200 space park is around about the same amount of time. I would probably spend an extra 5% of time managing a 200 space park. So really, and you look at how much more money I make on a 200 space park, it's significant. So I would prefer to see parks that are 75 spaces and above for my own portfolio. And I love 200 and above. I really love that efficiency.
Perfect. I think that makes sense. I know a lot of people talk, even on the multifamily side for us, some people bring us deals and I say, guys, it's just not that it's not worth my time, because I don't want that to sound stupid or arrogant, but the amount of money that the property generates, especially if you syndicate a deal with investors, after splits and hurdles and all different types of metrics, there's just not that much meat left on the bone.
Mm-mm.
So it really has to make sense. And when I talk to people, I say, if it's a personal portfolio deal and it's down your block and it's everything you're checking, go for it. But, if you want to bring a deal to our attention, just make sure it makes sense, because you're going to spend the same amount of time. So anyone listening, obviously, take that to heart if you're looking at deals, because I think it's important to understand what you're getting yourself in for. Is it worth the amount of time that it's going to take an effort to finish, and get the park going in the right direction? So thank you.
Absolutely. And I'll add to that, even though I wouldn't recommend getting less than 25 spaces, what if there was 3 small parks in town that ended up adding up to 40 spaces or something like that? Then it's probably worth it, especially if you can leverage the same management team to go around to all of the parks and the same contractors and everything. But do remember that when we do have separate properties, when we're doing due diligence, if we're doing sewer inspections over there and sewer inspections there and appraisal here, appraisal there, it's you some of them you're just going to have to be separated, and your due diligence expenses can be pretty significantly large if you're getting a whole bunch of small parks. So that could be a bit of a downside, but it could be a way to get small parks and sort of build your portfolio if you're going to focus in one area.
Exactly. That's something, obviously take into consideration, because it's important. We're actually buying a mobile home park right now. It's smaller, but it's right next to a 25 lot park. So total, it's over 40, and they're, give or take 2-3 miles away. So we're in the process of going through that. And, I'm like this right now, if it makes sense or not, but it is, in a very good location. So we'll see how it shakes out. But, I would never be buying one without the other. And they're 2 different sellers. So they both know if we go through due diligence and it's not what we want, we're not going to buy yours and not his. So we'll see how it shakes out.
Yeah. The other thing with small parks too is the financing. It's harder to get financing for smaller parks. One, if you're below a loan amount of 1.3 million, which is basically a $2 million deal, then you're going to have to go personally guaranteeing or go recourse. And even if you do get financing for a small park like that, it's probably going to be local bank financing. But for really small parks below 25 spaces, you're most likely going to have to come in all cash or go for a seller financing option or something like that. So that can be really cool and that can be really attractive, but just know that on the back end of the deal, when you go to sell it in the future, you could be left in that position too. And you might have to provide seller financing to offload the deal. So things to take into consideration.
Awesome point to bring up too, because the financing is definitely different. There's great financing out there for bigger parks. As you go down and smaller, there is a recourse component or a seller financing component. So go into the deal with the business plan in mind, because if you think you're going to buy it and flip out of it and whatever after you improve it, you may have to be, willing to finance and or understand who your buyer pool is going to be in that range. So it's a great point you bring up for anyone listening to just understand that business point.
Yeah, I think we saw a lot of the same things when we bought a 4-property scattered site in Jacksonville, Florida. They were all, 16 to 40 something units, but it was 122 units together. We would have never looked at any of those as one-offs, but because we could buy all 4 together, it was a cheap enough price that it was more expensive to do, operate, and return money than a combined 122 unit property. But we were able to do it just because the numbers made sense. We're not typically looking to buy scattered sites, smaller properties, because it's so tough to compete the way we operate. Mm-hmm. But it's the same thing. We were able to package those together, operate them as one property. We had to have the double amount of staff than we would for just a 122 unit property versus the 4 scattered, because the time to drive and being in all different places. Yeah. So it cost us more, but we were able to make it work because they were close enough. So that's the same thing where we would have never, if one of those deals came across our desk, we wouldn't have even given it the time of day, because it, like John said, it just doesn't make sense. You can't really syndicate a 16 unit, can't really operate that. At least it's not worth what we typically do. Because like you said, a lot of the time to do a 16 versus 160 unit property, it's not that much more. A lot of the setup is the same. So unless those 4 together, it wouldn't have made sense. So it makes complete sense when you're looking at things. If you can parlay it together into something else, fantastic. But it's definitely going to be somewhat more challenging than just one park, unless they're right next door, like the one John was talking about, in which case they might as well be one. So I think that makes a ton of sense. Another question I have, though, as you've been doing it for a number of years, I think the popularity of mobile home park investing has climbed and climbed and climbed as people are looking for better cash flows, better returns on their money from a yearly standpoint without having to sell. There's been tons of institutional money coming into the space. With the rise of social media, it's become more and more popular. What have you seen happening over the past couple of years? Has it been harder to find deals? Do you have to get more creative? Have you changed how you're looking at deals? Like, are you looking to, seller finance homes to people? Is there anything you've been doing differently, or you're just sticking to your guidelines, waiting for the deal to come up and taking it down when it comes to your table?
Yeah, that's a good question, and it definitely has changed. So let's scale it back. 2015, I was buying parks at 12 caps. 2017, I was buying at 9 caps. And now this is a generalization because each market has different cap rates, but we're looking at cap rates generally between like 5 to 7% in the mobile home park space. I still haven't gone below. I haven't actually purchased anything below 9, but I am looking at parks that are 8 and above. And so it's challenging because, first off, most mobile home parks that are listed for twice or double what they're actually really worth if you do a proper evaluation. So if there's a mobile home park out there that's listed for $1 million, it's probably in all reality only worth about $500,000. And that's due to the way that people miscalculate how to evaluate a mobile home park. The main component to that is when people take the home rent and then they apply that through to the net operating income and then they cap that. Essentially, they're applying a cap rate to the home rent. I don't do that at all. I only apply a cap rate to the lot rent. And then afterwards, once I've come up with the land value based off the lot rent, with a cap rate applied to it, then I'll get a discounted value of the mobile home park. A discounted value of the park-owned home inventory of its market value. Let's say the market value of the mobile home park inventory, let's say they got 10 homes worth $10,000 each, it's $100,000. I would pay about $80,000 for that home inventory. And then I would use the land value, which is the lot rent multiplied by the occupied paying lots, multiplied by 12 months, multiplied by the operating income, not the operating expenses, the operating income ratio, and then divided by the cap rate. And that's how I would come up with my land value. And so when you do that, you actually come up with a very, very different value than what you would as if you actually capped your home rent in there as well. So that's the reason for a lot of inflated prices there. Because what you don't want to do is if you overpay for a mobile home park, if you even catch it up at all, then that could be good, but mostly you're not going to catch it on the back end. So I stick hard to my numbers. I'm sifting through way more deals now than I used to. It's a lot harder to find deals, but I'm not going to waver from this. What have I changed? I'm open to doing things that other mobile home park owners probably aren't. Like, I don't prefer park-owned homes. However, for the right price, I will buy a park that has all park-owned homes if I've baked in the numbers enough to cover me for that. I think where a lot of opportunity exists right now, you were talking before about institutional buyers coming in and buying up the mobile home park space. Yes, that has happened more on the higher end in like the 4-star and 5-star parks. I'm more in the 2 to 3 star affordable housing space where lot rents are about $300 a month. 4 and 5-star, you can get up to there's lot rents up to like $4,000 a month in Southern California. It's kind of crazy. That's not the space that I'm in. But I'm open to looking at parks that have larger vacancies that are so large that maybe financing's a little bit like crappy to get for the park because, you've got only 50% occupancy. I'm looking for the large, big turnaround projects. I'm still looking for the other, 80% occupied with a little bit of value add on the back end. I'm still looking for that as well, but I'm also branching out and looking for deals that have tons of opportunity, but are also going to take tons of work. Because I've got the experience, I've got the team, and I don't mind taking on those projects. So, but a lot of people, they don't want to do that.
I think, I know this is the end of the podcast, but you just gave a amazing 3-3 minute breakdown of buy it right and where you could be a little bit different today, because you're right. Cap rates are totally different, but that doesn't mean you have to buy them, right? Just underwrite more deals, look at more opportunities, and pick the one that works. And the biggest mistake you can make, in my opinion, is capitalizing park-owned home rent, because banks won't do it. They're just not going to value that as importantly, if they do at all, as opposed to the lot rent only. So if you buy on lot rent only, you could withstand some beatings. And the deals that are publicized and that are out there, it's just a guy trying to, hit a home run on a price, because the pricing just, more often than not doesn't make sense. So I think the wrap up and what you just outlined was perfect for anybody listening. So I hope they stay tuned, or just fast forward to the end of this and you can hear it.
Yeah. I think it's interesting too, because drawing some similarities in kind of what we've experienced in the multifamily space over basically since I came in 4 years ago of, we've also seen cap rate compression come down and had to stray to some more heavier lifting distressed stuff. We bought 2 deals that were fully vacant. We've bought several that were 50 to 80% occupied that had some hair on them and required a heavy lift. And yeah, your cap rate today is maybe even non-existent. I mean, what's the cap rate on a vacant building? But your value on the back end is so high that it makes a ton of sense. So it's very interesting to hear that that's kind of the same path that you've been taking recently. I don't know how recently, but it just seems like, as more capital comes in and is willing to take lower yields or is willing to take a larger risk on upside, that you've had to get similarly creative in the types of deals you're doing.
Mm-hmm.
But yeah, I think that's a fantastic place to wrap up. I think John was right. I think people are going to get a ton of insight, ton of value from this episode. So Bryce, thank you so much for coming on and sharing everything. If people want to learn more about you, follow along, get in touch with you, where can they do all that?
Yeah, just email me, bryce@propertyworksusa.com. Works ends with a Z or a Z, depending on what part of the planet you come from. And just a quick minute here.
Yeah.
So I'm an educator. I obviously teach mobile home park investing. I've got a home study course called the A to Z of MHPs, which is basically financial freedom through mobile home park investing. It's a 20-hour home study course, 16 hours of online it's almost like you're virtually in a class, tutorials, and then 4 hours of the student literally putting together their own mobile home park investing business plan, customized for them to totally suit their needs and their desires and their goals. And that's kind of the point of the whole course. That course typically retails for $497. And right now, because of all of the stuff that's going on with the economy, I'm honoring a $100 discount off that. So for $397, you can snatch that one up. So if you guys want to email me, Bryce at Property Works USA, you can also check out my podcast, Freedom Hack Radio, on YouTube, where I teach people how to live free, financial freedom, time freedom, and location freedom, with a balance of financial wealth, health, relationships, spirituality, and having fun. So that would be the best way to reach out to me.
Love it. Beautiful.
Bryce,
thank you so much for coming on. And guys, thank you so much for listening to this episode of the podcast. If you're not already subscribed, please do so. It would mean the world to John and I. And if you are already subscribed, please send it to a friend, family member, colleague, coworker, somebody you know that you think would get a tremendous amount of value from it. And we also just launched a Facebook group where we are community-based. We want to connect with you guys, hear from you guys, see what you guys are looking for, help you guys out, and try to build a community around real estate. So you guys can find that by going to facebook.com/group/the REI experience and join us there. Once again, Bryce, thank you so much for coming on. It was fantastic having you.
Thanks for having me.
Thank you.